We're Philip Alexander, Senior Editor of The Banker, and we're reviewing the top 1,000 World Bank rankings. Philip, you wrote the cover story this month on the top 1,000. I mean, what were the key trends of the ranking this year?
Well, I think the headline is that the trend we've seen ever since the financial crisis for banks to hold more capital so they're better prepared to deal with shocks, that continued. And the aggregate capital to assets ratio for the whole of the top 1,000 actually rose above 6% for the first time this year.
Okay, I mean, it would have been great if we'd have been in that position going back to 2008, I presume. But now, obviously, the regulators have been trying to move things forward, and we have Basel III very much on the horizon. How much is that impacting on the ranking, and does it change the way we calculate the ranking?
Yes, that's right. So in the past, in particular, one of the things we had to do was we needed to strip out the current year's earnings from the bank's capital, because different banks were accounting for that in different ways in different countries, and we wanted to try and standardize things. Basel III lays out much clearer rules than that, and we're seeing a growing number of banks now are on Basel III, even though it's not meant to be fully complied with until 2019. We're talking about nearly 2/3 of the top 1,000 are already reporting in Basel III. So we've been able, it's simplified the process for us a bit. We no longer have to strip out current year's earnings and recalculate balance sheets. We're able to really take the reported numbers more and more as we see more of the top 1,000 make that transition.
All right, now you talk in your article about Basel IV, which is actually a sort of theoretical concept at the moment. but what would that mean? What are regulators thinking about the next steps, and how would that impact on banking and the ranking?
Well, I think regulators are generally happy with capital. They've tightened the definitions of what is capital, what can absorb losses. The real focus now is on assets. Obviously, for the Basel ratio, banks calculate assets by putting a risk weighting on it. So how risky is this asset? If it's more risky, I'll need to hold more capital. And there's been a fear that banks have been gaming that system a little bit. So regulators are trying to clamp down on that, number one, by intervening more in the way that banks model the risk weights. But number two, also with this focus on what's called the leverage ratio. It's similar to our capital to assets ratio. So no risk weights, just the straight capital to assets. And so that obviously, the general trend will be, especially where banks have been more aggressive with their modelling, they're going to be under pressure to hold more capital.
And one of the interesting things is that we have a lot more information on risk-weighted assets in the ranking these days, don't we? In terms of the percentage of risk-weighted assets to total assets.
That's right, we do, and it's been revealing that there's still a tendency in Europe for the proportion of risk-weighted assets to be lower, which suggests that European banks generally are going to be more vulnerable to these sort of changes in regulation. They'll either have to hold more capital or potentially just to reduce the risk in their portfolios.
Okay, complex picture, but we'll look at it in the July issue. Thank you.